what is happening in the markets right now? The pace of change is absolutely insane, and if you're not locked in, you're missing out on some of the biggest moves we've seen all year. We've got seismic shifts, strategic plays, and some serious questions being asked about the future. Get ready, because this is Bitcoin Bulletin, and we're diving deep into the stories that matter right now. First up, are we witnessing the dawn of a new bull market? The data is pointing to a revolution in how institutions are engaging with the space, and the numbers on supply and demand are telling a compelling story. We're talking about forces that could reshape the entire landscape, and you'll want to know exactly what's driving this potential surge. Then, we're breaking down the latest on Bitcoin's price action. September's historically tough streak is here, and the dollar's dance is creating a complex picture. Can Bitcoin hold its ground above that critical $100,000 mark, or are we heading for a deeper correction? We've got the charts, the analysis, and the key levels you need to watch. Next, a new player is making waves in the hedge fund world. We're looking at a unique strategy that blends the stability of institutional discipline with the daring spirit of innovation, all focused on a specific, high-growth area. This isn't your typical fund. It's built for a new era of investing. And finally, one company's bold move is putting its Bitcoin strategy under the microscope. Is their approach a high-risk gamble or a golden opportunity to buy the dip? We're dissecting the mechanics and weighing the potential outcomes. Stick around, because you don't want to miss these crucial updates. Hit that subscribe button, ring the bell, and let's get started. The institutional shift, a new bull market dawns. Are we on the cusp of a significant market upturn, driven by a fundamental revolution in how major players are engaging with digital assets? The latest indicators suggest that surging institutional demand, coupled with a rapidly shrinking supply, could be the potent combination that ignites a new bull market. This isn't just about price fluctuations, it's about a structural change in asset allocation and a redefinition of value storage. As more traditional financial entities explore and integrate Bitcoin into their strategies, the landscape is being reshaped at an unprecedented pace. The demand side is seeing unprecedented inflows from entities that previously shied away from the volatile digital frontier. These are not retail investors. These are sophisticated firms with deep pockets, seeking to diversify and hedge against traditional market risks. Simultaneously, the supply side is becoming increasingly constrained. With a fixed maximum supply and a growing number of coins held long-term by these institutions, the availability of Bitcoin on the open market is dwindling. This dynamic creates a classic economic scenario. As demand rises and supply falls, the price is naturally pushed upward. Analysts are closely watching the on-chain data, which reveals a significant accumulation trend among these institutional holders. Wallets associated with large financial institutions are consistently growing, indicating a long-term conviction rather than speculative trading. This sustained buying pressure, especially when met with limited sell-off from the supply side, builds a strong foundation for a prolonged upward trend. The narrative is shifting from Bitcoin as a niche digital currency to a recognized store of value and a potential hedge against inflation and economic uncertainty, mirroring the early days of gold's adoption as a reserve asset. The implications of this institutional embrace are far-reaching, potentially leading to greater market stability, increased liquidity, and broader mainstream acceptance. The very structure of the market is evolving, moving towards a more mature and integrated financial ecosystem where digital assets play a pivotal role. This confluence of factors suggests that the current environment may indeed be the fertile ground for the next major bull run, fueled by a revolution in how institutions perceive and interact with Bitcoin. But can this momentum hold as we navigate the often treacherous waters of seasonal market trends? We're diving into Bitcoin's September performance next, and the $100,000 mark is more critical than ever. September's shadow, Bitcoin's battle for $100K. As September unfolds, Bitcoin finds itself at a critical juncture, facing historical seasonal headwinds and a potentially weakening US dollar, all while the crucial $100,000 price level hangs in the balance. The cryptocurrency recently dipped below $108,000, reigniting concerns about a potential bearish trend, especially given September's notorious reputation in the market. Historically, this month has been a challenging period for Bitcoin, with data showing that it has closed in the red for 8 out of the last 12 Septembers since 2013, averaging a return of approximately minus 3.8%. This pattern is even more pronounced in traditional markets, with the S&P 500 averaging a minus 1.2% return in September since 1928, highlighting a broader seasonal tendency for assets to face downward pressure during this month. However, the current market dynamics offer a glimmer of hope that this year might deviate from the norm. One significant factor is the weakening US dollar. Analysts note a minus 0.2552-week correlation between Bitcoin and the US dollar index, DXY, the lowest it's been in 2 years. A continued decline in the dollar could provide substantial tailwinds for Bitcoin, especially if the Federal Reserve signals potential interest rate cuts in the near future, a move that typically weakens the dollar and increases the attractiveness of riskier assets like Bitcoin. Technically, the $105,000-$110,000 zone, previously a resistance level, is now acting as crucial support. More optimistically, some analysts point to a hidden bullish divergence in the Relative Strength Index, RSI. This technical pattern suggests that while the price has fallen, the underlying momentum is not weakening as much, often signaling a potential reversal. This divergence indicates that buyers might be quietly accumulating positions, potentially setting the stage for a rebound. Traders are divided, with some viewing the current price levels, particularly between $102,000 and $104,000, as an attractive accumulation zone. Others, however, remain cautious, warning that a failure to hold the psychological $100,000 level could signal the end of the current bull market. This crucial support level, alongside the former uptrend line around $112,000, represents a significant battleground. A decisive break below $100,000 could trigger further downside momentum, while holding above it and consolidating could pave the way for a renewed upward move. The market's sentiment is clearly at a crossroads, with momentum indicators like the MACD also showing bearish divergences that need to be overcome for a strong recovery. The next few days and weeks will be critical in determining whether Bitcoin can shake off its September curse and build upon the bullish signals, or if it will succumb to broader market pressures and the historical seasonal weakness. But what happens when innovation meets institutional rigor in the world of finance? We're exploring a new hedge fund launch that's charting a unique course. Black Pill Capital, innovating with institutional edge. In a move that signals a growing maturity and diversification within the digital asset investment space, Black Pill Capital has officially launched, introducing a novel hedge fund strategy that aims to bridge the gap between traditional financial discipline and forward-thinking innovation. This new entity is uniquely positioned to cater to accredited investors seeking exposure to companies actively integrating Bitcoin into their corporate treasury strategies, a trend that is rapidly transforming how businesses approach value preservation and growth. The firm's CEO, Jeff Grant, emphasizes this distinctive approach, stating, "Our fund ventures into a frontier where far more dimensions are undefined, where unknowns, and even unknown unknowns, dominate. This is not the domain of the analyst. This is the domain of the innovator." Black Pill Capital is where institutional expertise meets entrepreneurial innovation. This philosophy directly addresses the evolving nature of the financial landscape, where traditional analytical models may not fully capture the potential of disruptive technologies and new asset classes. Unlike many funds that are solely managed by seasoned finance veterans, Black Pill Capital's founding team is built on a foundation that explicitly combines entrepreneurial vision with institutional expertise. This dual focus allows the firm to identify and capitalize on asymmetric opportunities that might be overlooked by more conventional investment vehicles. By concentrating on companies that are pioneering the adoption of Bitcoin as a treasury asset, Black Pill Capital aims to support and benefit from the broader movement towards sound money principles. Their strategy involves a deep dive into the corporate adoption landscape, evaluating not just the financial health of companies, but also their strategic commitment to integrating Bitcoin, which is seen as a key indicator of future value and resilience. This blend of institutional rigor ensures robust risk management, compliance, and operational efficiency, adhering to the high standards expected by sophisticated investors. Simultaneously, the entrepreneurial spirit drives the search for unique, often contrarian, investment theses and the agility to adapt to the fast-paced digital asset market. Black Pill Capital's launch represents more than just another hedge fund. It signifies a commitment to accelerating the adoption of sound money by actively backing the companies at the forefront of this transformation. For accredited investors, this offers a structured yet innovative pathway to gain exposure to a burgeoning sector, managed by a team that understands both the established financial world and the disruptive potential of Bitcoin. The firm's website and contact information are available for those interested in learning more about this pioneering approach to alternative asset management, marking a significant development in the convergence of traditional finance and the digital asset revolution. But is this bold strategy a high-risk gamble or a calculated opportunity to capitalize on market dips? We're turning our attention to Metaplanet's unique approach next. Metaplanet's Bitcoin Gamble, Premium Compression or Buy the Dip. Metaplanet, a company making significant strides in the digital asset space, is currently drawing considerable attention for its unique strategy centered around Bitcoin premium compression. This approach, while potentially lucrative, also carries substantial risk, leading to intense debate among investors and analysts about whether it represents a high-stakes flywheel effect or a prime opportunity to buy into the market during a dip. The core of Metaplanet's strategy involves actively managing the premium that Bitcoin trades at on its platform relative to the spot market. By implementing mechanisms to compress this premium, the company aims to generate additional yield and potentially drive value for its shareholders. This is a sophisticated financial maneuver that requires a deep understanding of market dynamics, leverage, and risk management, particularly in the often volatile cryptocurrency environment. The flywheel aspect of this strategy suggests that successful premium compression could create a self-reinforcing cycle of growth. As the company becomes more efficient at managing these premiums, it could attract more capital, leading to larger-scale operations, further efficiency gains, and ultimately increased profitability. This virtuous cycle, if realized, could position Metaplanet as a leader in innovative Bitcoin-related financial products. However, the inherent volatility of Bitcoin and the complexities of premium management introduce significant risks. A sharp downturn in the Bitcoin market or unexpected shifts in market sentiment could quickly erode the gains from premium compression and even lead to substantial losses. The buy-the-dip opportunity arises from the belief that Metaplanet's strategy, despite its risks, is fundamentally sound, and that any temporary price drops in Bitcoin present an attractive entry point for long-term investment in the company. Investors are closely watching Metaplanet's financial reports and on-chain data to gauge the effectiveness of its strategy and its resilience in various market conditions. The success of this approach hinges on Metaplanet's ability to navigate market fluctuations, manage leverage prudently, and maintain a competitive edge in a rapidly evolving sector. Analysts are weighing the potential for outsized returns against the considerable downside risk, making Metaplanet's current position a focal point for those interested in the innovative, and sometimes risky, intersection of traditional finance and digital assets. The market's reaction to Metaplanet's ongoing strategy will be a key indicator of how such sophisticated financial plays are perceived and valued in the broader investment community. These are the stories making waves, but what's the takeaway from all this action? We'll wrap it all up with a quick recap and your next steps. And that's a wrap on another high-octane episode of Bitcoin Bulletin. We saw the potential for a new bull market driven by institutional demand, dissected Bitcoin's critical battle for the $100,000 mark amidst September's seasonal weakness, explored a new hedge fund blending innovation with institutional discipline, and analyzed Metaplanet's high-stakes Bitcoin premium compression strategy. Don't miss a beat, hit that like button if you found this valuable. Subscribe for more critical market updates. Smash that notification bell so you're always in the know. Follow us on all social platforms for real-time insights and drop a comment below with your thoughts on today's news. We'll see you next time.